How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Australian dollar versus Japanese yen. It's currently now 10:48 a.m. here in New York, so London close is just starting. And we can see that today we confirmed a higher swing low formation. We spoke about this a couple episodes ago. We said that we could take an educated guess that the next higher swing low was going to most likely form inside of one of these PD arrays, right? One of these busies or fair value gaps, and it happened to be here. You can see it also happened to form on the ideal trading days, Tuesday, Wednesday, Thursday. So it made that swing formation. This swing formation here, the commercials were increasing their net longs, waiting for another leg to go higher, right? Bullish. We said that if we got a down close day, that would be our indication to say, hey, I should be looking for longs in the next couple days. And that's exactly what produced here. We got Wednesday yesterday. I know the daily update didn't process properly. If you weren't able to watch that, I do post it here on TradingView as well. So check out TradingView. You'll see the daily updates for Wednesday, the 14th. Today, on the 15th, we can see price still is going up. At said point, it dropped below midnight opening price, below London opening price, etc., New York opening price, and found some type of ground and went higher, right? Some type of sponsorship to go higher to then get to our design target here, that swing high, buy side liquidity, and still we're getting real close to that weekly swing high, which is also our IPTA 20-day look back high as well. So we are not surprised in what's happening in price action. If you've been following along day by day, you wouldn't be surprised exactly what I'm talking about. You know that the structure is bullish. How did we arrive here? We spoke about it. 60-day low was broken. We dropped below February's opening price. The best buying opportunities happen down here. Now, the least ideal buying opportunities are unfolding here because the market is trending bullish. If this monthly candle is going to keep progressing, as a retail trader, you're going to be forced to buy in a premium above the open. Because if you weren't on your P's and Q's and you didn't find a way to be long at a discount, or you didn't come to that conclusion, your analysis did not add up to a bearish Australian dollar versus Japanese yen, then you most likely took shorts, right? You were looking for a break retest, some type of pattern like that, or some other retail logic that you were using. You probably thought that the yen was going to gain strength in February and all the other fiat currencies were going to lose strength and depreciate. But instead, we saw that yen depreciated and all the other fiat currencies kept rallying. The simple reason why we took the stance that AJ was going to rally or any of the other yen crosses would rally is because the Japanese yen has a negative interest rate. If their monetary policy is negative, the yield is going to be low and investors are not going to be likely to hold that fiat currency. They're more likely to convert their Japanese yen. Think about that. They're more likely to convert their Japanese yen to Australian dollar because that central bank, right? The RBA, the Reserve Bank of Australia, has a positive rate. And I believe it's like 4.35. So why would you want to hold yen if you're not going to gain anything holding that fiat currency? Doesn't make a logical sense. As a businessman or a businesswoman, you wouldn't want to hold something that's going to bring you negative returns. So let's get into something else, another asset class, right? Or another fiat currency, more specifically, that's going to bring us returns. An Australian dollar is definitely going to give you way more returns than Japanese yen. A lot of folks are saying that Japanese yen is going to gain strength. We don't know that until they're able to increase and get out of a negative rate. Then we can start talking about that. It's all smokes and mirrors. It's all a bluff. They keep saying, oh, we're going to do an intervention. Oh, we're going to change this. We're going to do that. They've done interventions, which definitely has caused some of the yen crosses to, short term lose value, right? And gain strength over the other fiat currency. But as time progresses, we see that the central bank hasn't done anything about their rates and investors are just not having it. And I know that investors are not going to be fooled by the Bank of Japan telling folks that, hey, yeah, it's talks. It's only talks about raising the rate. Oh, it might change out of negative rate. We've been talking about that for the last couple years. Since 2016, the Bank of Japan has a negative interest rate. So until they do something about that, then we can actually finally have the discussion that yen may be able to outpace Australian dollar or CAD dollar or DXY or British pound or euros. Then we can have that conversation. Let's take a look at, and we can see we're not surprised too because this is a large candle. And now the market here hardly did anything because large cycle back into a small cycle. If you get a small day, ooh, the next day you should be looking for explosive dynamic price action. Those small candles are indications that the market is once again condensing, right? Getting retail traders uninterested in the marketplace. Because when they see the large candles, that's when they're super interested. But once you've already seen the large candle, you already haven't been a part of that move. It's already left you. The party's done. The boat has taken off. It's not docked anymore. When they said, "Hey, we're gonna take off at 10 o'clock," and everyone's like, "Ah, no, you're not. No, you're not." And it finally takes off at 10 o'clock. Now they're at the dock, like, "Oh my gosh, where's the boat?" It left already, guys. So you got to be paying attention. You have to be on time. If this day is small, I wouldn't be surprised if Friday also turns into a large range cycle, another large push to the upside. Though I don't like to trade Fridays, just taking an educated guess. It's all speculation. You don't have to be right, but we know these things because the market gives these patterns based on solely price action, a natural cycle, large to small. When you get those small down days too, right? Stacked confluences. If it's a down and a small candle, ooh, you might even have a banger the next day. Price may fly very strong to the upside. It may not be the next day, it may be the following day after that, or etc. But you know in the near future that you're going to get a large dynamic day, and you want to be able to catch that large dynamic day because it's going to pay well. And the market's not going to be lethargic. It's going to move. It's not going to be very sluggish. People like when the market is moving and it's very volatile because you're in and out and you don't have to sit here staring at the charts for a very long period of time. But when the market starts to become lethargic and sluggish, you're just sitting here wondering, oh, what's going on with my pair? But the other pair is doing this. It's just because you're not realizing the cycle that it's in. And the same thing can be applied for the weekly. If last week's weekly candle was very large, like a very extreme and overextended, let's take a look at this. Just an example. Look at this large candle to the downside. Why don't we get another large candle the next following week? We don't, because we've got all the retail traders what? Short. We got them all short. They're chasing this. People are getting the worst entries, right? They're selling in unideal environments. Not to say they're not profitable, but it's just very unideal. At that point, they might be overly invested on the shorts because look how large this candle is. It's enticing. People are chasing that. I want that. I want to catch this large move. So let me get in because I think it's going to run another 500 pips lower. That's unrealistic. The next candle, the next weekly candle opens, doesn't even go anywhere. Doesn't go anywhere. And then you can see price turns around. And after every down week, notice the buying. Down week, buying. Down week, buying. We have 2 consecutive down weeks. Down week, buying, buying. The fact that we're getting a back above this high here, making that swing formation after taking out sell side liquidity, that false raid here we talked about, and look, price going up higher. Now the false raid that happened in February is right there. False raid goes higher. It's trying to push higher. UJ, not surprised that it pulled back today. We did have a failed Asian session model, 2 consecutive losers back to back, but that's no surprise either. So for those that are tracking the Asian session model, we know that there are going to be moments and times where you're going to have back to back losers and back to back winners. It's a no brainer. Everybody will come across that in their career at said point with whatever model that they're trading. We can see that it's most likely going to create what? A higher swing low formation within this range. So we want to see if price is going to make a turning point here and turn around and see if Friday does not take out Thursday's low. And if Friday takes out Thursday's low, we still want to see it respect the most recent higher swing low. If it does do that, it would just be a false raid and continue going higher again. Because in trending environments, we do still have false breaks. It's not that it's going to be very clean and it's not going to take out the highs and keep going. There are going to be those moments where it runs the low and then it runs back high. It's doing that because it wants to knock people out of the trend, get large funds or private investors on the wrong side, and then push price towards the intended directions for the commercial speculators or the market makers. Of the yen crosses pushing up. Look at it. See that? Higher swing low. compared to this one down here. Go to another yen cross. CAD J. Looks like it coming down. Looks like it's going to raid this, but comes right back up. Want to see it push higher. EJ, same thing. It's in a small range. Now, if this candle is going to close down, we got 6 hours, so we don't know if it's going to cut back to its open and close green. But if it were to close down and still remain small in this cycle that it's in, because this is a small one, this is a small one currently, we would expect that Thursday would have been large. But we see it doesn't happen here. That means Friday is going to be either large. If it doesn't happen Friday either, then maybe Monday, maybe Tuesday. So we are on cue, right? We should be watching this, right? We should be attentive to this because we know a large setup is going to form. A large candle like this is due. GJ, same thing. Two down candles. Maybe the next candle here Friday does not take out Thursday's low and then it trades up higher into a large range cycle. Let's go back to AJ just to recap. I think we have one more here. Swiss J. Finally getting turning around, right? So this is the end cross that was taking a while to get on page. And I'm finally glad to see it starting to turn around. It didn't break this low here. Got a small candle on Wednesday. Thursday, look, it's larger than that. And it's pushing up. We want to get to this buy side. All this buy side liquidity up here. We need to make another leg higher. It's due. It's been trading sideways. But we can see the subtle nuances in the swing points. Raid the swing point, then run back higher. Raid a swing high, right? Then run back lower. It's been consolidating. We don't like environments like this, but we want to pay attention to environments like that because all markets start in a consolidation. And once it gets out of that consolidation zone, right, either breaks this consolidation low, sell side, or consolidation buy side, highs, and it continues trending in that direction. Or it breaks one side of the consolidation zone as a false break and then runs back to the other side for continuation. Or it could be a double false break at times. At times we can see it go like this, right? These are just things you've learned over the years. Breaks the low first, comes back up, doesn't continue trending higher, then it goes back lower. That's another scenario. Got to be open-minded to what the market may give you. Got to understand these things. So just a recap before we go. So we summarize everything. AJ still pushing higher. We got that down candle, and we also got that confirmation of a higher swing low formation. The most recent swing low we had is all the way down here. Now, to see price come back down here to target this swing low would probably be very aggressive. Very aggressive. The yen would have to really appreciate. Or it breaks a swing low in a more recent time, and that's the shift. There's bearish momentum coming into play. So if price were to break any swing low while it's in a premium for the monthly candle, it's above the open, so it's in a premium. That could be the shift, bearish momentum. We would wait for what? Lower swing high to form. Something along the lines like that. So hopefully you find this insightful. Peace.